So what do you think really led down to the slowdown of the pre-construction market right after?
Free money, call it. When you have interest rates at around 1%, people were borrowing money against their own principal residences at less than 2%. It's the perfect storm. Rates started to go up. Money got more expensive, so the variable rate quadrupled. But when rates go up 4 times, all of a sudden that throws any pro forma of a developer way off.
Guys, before we go any further, be sure to hit that subscribe button, hit that like button, and share it with anyone that would find this useful. Now let's go back. If you bought a pre-con in the last few years, you probably have a lot of questions, especially right now that it's time for occupancy or closing. Today, what we're gonna talk about is what's happening in the pre-con market, what's happening in the assignment market, and cut the noise and get to the bottom of what exactly is happening in Toronto real estate market. My name is Nima. I got Jeff Slightham here.
Hey everybody, it's great to be here. Thanks for great to be back, Nima.
Grew for pre-con. This guy knows everything about pre-con, so
awesome.
We're honored to have him here.
Thank you.
So what we're going to talk about today is what's really going on in Toronto's real estate market in terms of pre-con, because what's been really driving a lot of sales for the last few years especially was the pre-con market because of the affordability, the payment structure, and I just talked for myself. I mean, like one of the first pre-cons I bought was back in 2005. And back in the day, like, you would buy something, by the time it was done, you were making almost...
You made money.
Yeah, you made your deposit. It was doubled
that
up.
That was the goal, right?
Yeah, that was the goal. And, we did that again, and it was working out. But for the last few years, let's just call it since, I would say 2018, 19, a lot of the numbers didn't make sense.
That's correct.
And I feel like there was a lot of future pricing, but again, it was coming from I'm guessing, the cost. So I want to dive into that and see why pre-construction market, let's say pre-2015 was actually working.
Yes.
And now it's not. So
you're right. Yeah, it's not.
Yeah.
Yeah. No, it's a great question. So call it in the early 2000s, like you said, all the way up to 2015. In the early 2000s, land was more affordable for the developers. Labor costs were more in line, material costs, all those kind of great things that the math all made sense. So when you put the formula together, you'd sell, say, for $300 a square foot. And then you'd put, your deposit down, your 20%, and then by the time it was finished, you'd actually make 20% on your deposit. So it was a huge win. So more and more people, there was more demand, more people were getting into the market. So as demand increased, more developers, more funds got into the market and so all of a sudden you saw all these cranes. I think there was Toronto held the record number of cranes in the world. At one time, it's something like over 250 cranes or something like that. It was a massive number. And these were all majority of them, 99% of them were all residential towers. And then you get to 2015 and beyond, labor costs started to go up. You had the value of the land started to go up. So the cost of land, the cost of labor, and the cost of material started to trickle up. So then the goal was all of a sudden it shifted. Things shifted, right? If you looked at a graph, there was a point in which the lines crossed versus resale, where actually pre-con got more expensive than resale. So all of a sudden, you're now buying future value. So you'd have, resale was around, say, let's use again $300 to $400, even say $500 a square foot. Pre-con then would say $600 a square foot. And even then you'd ride the wave, and eventually when you close, it would be worth a little bit more, or in terms of future value, be worth either market value or maybe a little bit more. Yeah. Right. So than what you paid for it. And then we hit COVID, where it was right with it, free money, call it. When you have interest rates at around 1%, people were borrowing money against their own principal residences at less than 2%, maybe even, around 1%, which is basically call it free money, but it is never will we see, and arguably we'll ever see rates in that range ever again. And so everyone said, well, hey, you can borrow. Why wouldn't I do this? My neighbor's doing it. I've talked to this person, that person. They're all doing it. Everybody started to jump in. And again, by that point, land value, again, has continually gone up. So in 2018, 2019, 2020, 2021, when all these things, all these projects were launching, again, labor costs were at a peak, material costs were at a peak. There was a major issue with the shipping of materials. For example, plumbing materials, drywall, electrical, all these things, costs just went through the roof. And of course, developers, their margins are already tight. They were passing those costs on to the sellers. Yeah. And all of a sudden, 21, 22, we really hit the peak. And when you hit a peak and prices appreciate that quickly, things tend to fall off. And that's where we are now.
Right. Do you think it was mostly because of the cost of construction that the prices went up? Or was it in conjunction with, let's say, builder's profit and also a lot of divvies and the development charges and taxes?
It was kind of, you know what? It was the perfect storm.
Yeah.
Right? Rates started to go up. Money got more expensive, and clients were borrowing money at variable rates. So the variable rate quadrupled. It went from 1.5 to 4.5, maybe even 6, or even more than that. Like it went up to almost 6%, something around that rate. It was a massive increase. You have the developers' costs going up. You have cities and municipalities charging their development charges because things are, when the market's flush and everybody's happy, everybody's buying and selling, they're not paying as close attention to the certain costs, while the municipalities want to participate in this as well. And so they were charging astronomical development charges. And to a certain extent, in some cases, they still are. And we're navigating that. The developers are navigating that as we speak. But that's another topic. But so all these things, call it a perfect storm, right? So you have, again, borrowing costs, material costs, you have COVID, all these kind of things. So all of a sudden the supply chain during COVID got all bunged up. So materials costs went through the roof. It cost a ton of money to ship these materials that are coming from China, Windows, you name it, coming from all over the planet. The costs all went up drastically. And then, and everybody was still buying. But again, when costs go up that quickly and you're charging, developers are charging $1,800 to $2,000 a square foot for a condo in downtown Toronto. Yep. At that time, when a couple of years ago they were selling for $1,500, things don't it's not healthy for things to appreciate that quickly. And again, here we are.
And I think that was the main reason that this whole run up on the prices happened.
Yes.
There was a chart that was actually just pulling it up right now that really tells a good picture. So right now, as of 2023, that's from Altus, that the land value for pre-construction in GTA has been roughly around 25%. Okay. Construction cost has been roughly around 45%
of the total cost.
Of the total cost. So right now you're at 70% already. Yeah. And then you got the soft cost and the government charges that are racking up another 30%. So that leaves the developer roughly around 10%.
When you're building a project, 300, however many units, at least very little margin for error on your pro forma, right? So when you're a developer crunching the numbers, you've got to be very certain, because all of a sudden, if you've got to give things away, like all of a sudden your promotional costs go up, and really your marketing costs start to trickle up to encourage people to buy your product, that is directly cutting into your revenue. And a lot of cases, you've got investors, all these kind of things, these promises you've made, all these great returns you've promised to your clients, all of a sudden that's not going to be the case.
Right. And do you think, because we've seen a bunch of the developers like canceling projects. Yes. One is due to not selling it. So we had a recent project, I think it was with Madame, it was canceled. Yep. Clove condos. They didn't sell. So that's a different situation. But some projects, again, we know one Bloor that had cost overruns. They couldn't do it.
Yeah, it's very different. That was very different.
Yeah. And do you think that's due to the market condition, or is it due to just like poor management? Because we've had like that, and then we had also Van Dyke, for example, or there's been like a few other smaller
developers. Yeah, there's a bunch of things going on. So as costs went up, so all of a sudden the rates start to change, and it's good for everybody to know when developers borrow money for their construction costs, it's not at a fixed rate; it's a variable rate.
Oh, wow! And
so when rates started to go up, like in the Van Dyke situation, they had other sites on the go. All of a sudden they couldn't afford their pro forma was based on rates being, their financing costs being
X amount.
X amount. And yeah, there's probably some flexibility, but when rates go up 4 times, all of a sudden that throws any pro forma of a developer way off.
Wow.
And so they were doing some funny things to finish, borrowing money from one site to finish another and all these kind of things. I don't know the whole story of it, but it wasn't very, very clean. And I can only assume the one bluer was similar to that effect. And it was that project, the scale of that project is massive. So again, very important to have your numbers and figures locked down. But again, when borrowing costs are all out of whack and things are changing very quickly, it's to your construction costs because you're borrowing more money to finish and things like that. And the cost of borrowing is only going up.
Yeah.
You're going to run out of money very quickly.
So pretty much we know the prices of pre-con went up because the demand was going up. We had the run up. Everyone was like trying to buy. So developers are seeing the demand, so they price accordingly. 2, we got the construction costs going up due to COVID, materials going up. So they had to hedge against that. So they raised the prices.
Yes.
But what happened when the market slowed down? And I know a lot of people ask, okay, you know what? We up to even like two years ago, people were still buying pre-con, and suddenly, everything changed. And, the latest figure came out in August, 118 units were sold.
Yeah. For the year, like almost for the quarter or for the year, it wasn't very many.
Which is crazy.
Yeah,
118 units is nothing.
It is nothing.
Yeah.
For a city of our size where you have...
We did 2 of them, but...
Yeah, nice. Of course, you're the guy.
Yeah.
I love it.
It was just like, there are good deals out there.
Absolutely.
Sometimes.
And this is it. If you've got your toe in the water or oar in the water, whatever you want to call it, you're going to find some great opportunities like that.
Yeah. So what do you think really led down to the slowdown of the pre-construction market right after...
Great question. Again, I think it was a bit of a formula. So you had, the couple things for the buyers, majority of them investors, the math stopped making sense. So you were taking possession of your unit, closing on it. You put a tenant in there and you'd be underwater anywhere from $200 to thousands of dollars every month, depending on the size of your unit and what you had purchased and where you'd purchased. So all of a sudden that word hits the street, and all at that time in the investor pool, which is again the bulk of the buyers, just said, no, I'm not going to put my money there anymore. It's not safe. It's not a secure investment. And that's when, of course, the 1,800 to 2,000 a square foot, people aren't going to pay that anymore.
Yeah. And a lot of them weren't even appraising, which we know now, like a lot of banks, financial institutions gave blanket appraisals to
get that covered. But again, as soon as the investors of these condominiums pumped the brakes and said, you know what? Because investors, they're doing the math.
Yeah.
And they're saying, wait a minute, what is the current market rent?
Yeah.
And what is it going to cost me for my debt? Because all of a sudden, cost of borrowing went from 1.5 to 2.5 to 4.5 to 6.5.
Yeah.
Right. And so all of a sudden, the math just
doesn't anymore.
Doesn't work anymore.
Guys, before we go any further, be sure to hit that subscribe button. Hit that like button and share it with anyone that would find this useful. Now let's go back. So I think exactly what you say. I think there is like a few important factors that led to the slowdown. One was as the interest rates went up, the carrying cost of these units didn't make sense, especially those who bought it in 2020, 2021, and they're carrying something that doesn't even, it's probably 30, 40% below over market value.
Yes.
So the math for the rent doesn't make sense.
Doesn't work. And then you have all the deliveries. If you can imagine, you had the heat of our market from 2015 up to 2022.
Yeah.
You have all the deliveries now. We're at 2025. You have all these deliveries. I mean, this year in 25, we're going to have 30,000 new condominiums delivered. Record number. Next year, we're going to have around 25,000.
Yeah.
So these are record number deliveries. Now, that being said, they are being rented. The rental pool is relatively tight. There's only really a few weeks of inventory. But when there's that number of delivery of units, whether they're coming up for sale or for rent, it's going to put downward pressure on pricing.
Yeah.
So you're putting pressure on rents to come down, and you're putting pressure on the resale price.
Yeah, exactly. So as mentioned, interest rates went up, and you had an issue of people, having their payments way over what the rental could cover.
Yes.
2, we also had the flood of inventory that went up, which I think started around last year when they announced the capital gain tax.
That's
it was
right.
in April, May, which we saw a huge number of inventory, especially one bedroom plus, and rush to sell before June.
That's
that was
right.
the deadline.
That's right.
And people, I remember in
It's a real mess.
Yeah, we were selling.
It was a couple of when Trudeau was in power. He had this capital gains
tax that came up.
He was going to come in and assess everybody, and everybody went to market.
It was crazy in Vaughan, Transit
and then it
City.
never came to fruition.
Exactly. We had 5 condos in Transit City. We had Expo 1 and 2 next door to it. There was like total of, I don't know, like 7 condos to 9 condos there. There was 14 2-bedrooms for sale in February. And then when they announced this is happening in April, it suddenly went up to 30. It went up to 70. And I remember, I think it was in May, there was 96 2-bedrooms on the market in a tightly packed complex. Like there's no way at that point you can differentiate and to just drop the price.
No.
So prices a skyfall from like over there, at the peak, they were selling about $1,000 a square foot.
Oh, yeah.
At the end of it, they were selling for around $720 a foot.
Yeah.
And you had to let it go because there was no other option if you had to sell.
If you had to sell, that's it.
And so that was one of the other reasons I think caused the prices to come down. And people that were buying pre-con previously, they would look at across the street something that was built. They're like, okay, you know what? I bought this condo at $800 a square foot. Now across the street, the resale is selling $1,000. So now I'm ahead. But now it's the reverse. They're buying something that's coming into occupancy at like $1,500 a square foot. Across the street, a condo that's a year old that finished is at $1,000 a square foot. I mean, we have right now downtown.
That new building's not going to appraise, right?
Yeah, and the appraisal has become an issue. So I think these are again some of the reasons why the demand for pre-con went down. Is there anything else that you think that led to the slowdown of the pre-con?
Great question. I think we've hit a lot of key points. I think it's the other thing is just people's how you feel, right? It's what you like. It's when you hear about what's going on, the rents aren't covering things. All of a sudden, I'm out of pocket. That's scary for a lot of people, and they're like, absolutely not. So people became fearful of owning an investment and owning real estate like that in our city. Will this pass? Absolutely. And in any time there is fear in our marketplace, this is when opportunity presents itself.
And exactly. And I think the pre-con market is not dead. I think it's just pretty much sobering up after 5 years of partying and it's just coming to its reality. And people are like sobering up and seeing, okay, you know what? Maybe at the peak, those prices were not sustainable. Because I recall, like, you know, if a condo is being sold down on around Jarvis and Carlton area for $1,800 a square foot, I mean, I was looking at these numbers and I'm like, okay, you go in Yorkville right now, you could buy resale for $1,500. And you're just like, why would you go all the way down there and buy something?
Yorkville should be $2,000 a foot, arguably, easily.
And it's not right now.
No.
Like right now, like we just sold a unit with parking roughly around like, I think $1,400 a square foot.
This is it.
Which across the street at 11 Yorkville, they were selling them at $2,000 a square foot.
I know. Yeah.
So again, that leads me to this section talking about the opportunities in this market because I just mentioned like we bought 2 pre-con.
Yeah.
One of them was an inventory unit at a Liberty project near Promenade. And okay, these units, their builder is not only selling them at much higher discounts, units are ready. You can go take a look at them. They're giving you a lot of incentives. I mean, I don't want to talk about it, but it's amazing incentives you're getting. And it puts you in a good position as opposed to buying a resale. We were looking at resale condos for a client. And suddenly I see this, I just called them and the deal I was getting for a brand new condo was way better than a resale condo across the street.
This is it. It's finally starting to happen, right? Yeah. And those opportunities, I think, and you can correct me if wrong, are on soon to be delivered product.
Exactly.
Right?
No, it's already like done. It's occupancy.
Occupancy. So there you go.
Clear.
So you can move in.
Yeah.
This is it. So there's a huge opportunity. And that's on the I would say low-rise product. And I've also heard, that's on the high-rise product and on the low-rise new product as well. That's where the opportunities are right now. You're seeing brand new townhomes, detached, semis, towns, you name it, at equal or better value than resale market opportunities right now.
Beautiful.
And so I think this is where you've got to be looking. You've got to, as realtors, we've got to be educated on this. You've got to know, it's not, if you're a resale realtor, I think you've got to know, like yourself, you've educated yourself on where the new opportunities as well in this market. So you'd say, hey, yeah, there's this resale opportunity here, but hold on, let me just check this out. All of a sudden, you're a way better value. They're motivated to sell, and you can obviously pick some colors, kind of some cool things, and just say, and move into a brand new building.
Yeah, and I mean, the reason we approached this project was, again, like the whole fact that if you're buying the as a first-time home buyer, that GST rebate, which is up in the air right now, but it's still like, you could get qualified for. Second was you get a full warranty for the full year. And we even pushed the occupancy further out. So, they were able to not go in and, get some benefit of that. No development charges, nothing, just go in as if it's a resale. So
Fabulous. Fabulous. And this is great. You know what to ask for, because a lot of folks don't know what to ask.
Yeah.
What to develop. They just think this is sticker price and that's what you pay and this is what you get. That is not the case.
No, right, especially right now in this market. So again, talking about the opportunities, the smart plays in the market right now, besides from finding a deal in resale, is the pre-con inventory that we just discussed.
Absolutely.
The second thing is also the assignment market. A lot of people that have bought, they're in a position that they need to sell. And again, we're not talking about, taking advantage of someone. People are stuck and they're willingly walking away from their deposit. So you would be helping someone buying something off of them, and you're getting a brand new unit, which in many cases, the prices we're seeing is well below today's market value.
It is.
So I think like that's the second opportunity.
Yes.
Yeah. Go for it.
No, so I'm just saying, like, that's exactly it, because you're assuming their deposit that they've paid to the developer. So now all of a sudden that 20% or 15 or whatever it might be, you don't have to come up with anymore. It's already been paid. And that seller, or that now seller of that contract for the new unit, is walking away from that money. Yeah. So again, if the numbers align based on you not having to put that deposit, it gets much closer to a resale value product.
Guys, before we go any further, be sure to hit that subscribe button, hit that like button, and share it with anyone that would find this useful. Now let's go back. Which segment of the condo market would you see, or which areas in condo market do you think would have the first rebound? Like, we're talking about 1 bedroom, 2 bedroom, 3 bedroom condo towns. Which type of product you think would be a good time right now to purchase?
Well, I think downtown Toronto. Talking to my friends in the commercial business, they have said downtown's office space, downtown Toronto's full. Like, it is office space. It is next to impossible to find office space. Banks are taking back space that they relinquished during COVID when everybody went to work from home and their leases are coming up. They're walking away saying, nope, we don't want to renew the space. They're literally, some banks were walking away from hundreds of thousands of square feet.
Wow.
And they are now taking back that same square footage. So with people coming back to work, people coming back to the city, it's not happening as fast, I think, as everyone thought it would when COVID wrapped up, because people got comfortable working from home and living outside of the city, while big companies and big businesses, banks and so forth, have realized working from home isn't as efficient as everyone thinks it is.
Yeah.
And so they want people back into the office. And so with people coming back to work, arguably people are going to move back to the city. They're going to want maybe something a little more convenient, closer to the office, things like that. So it's going to take a bit of time for the residential side of things to really pick back up again. You're seeing now rents really find that solid footing where rents were coming down based on the number of new deliveries. But even with the number of deliveries that we are seeing, you're not seeing a lot of downward pressure on rent. There's only a couple weeks of inventory in terms of what's available for lease right now. Again, with the deliveries even that are happening. So again, my feeling is that's just a sheer number of people coming back into the city.
Which is super interesting because the rent prices dropped, and at the beginning of the year, I was kind of worried for the rental market because we had a few rentals. It took a little longer. Like, we're used to
I remember that.
A week listing and then it's gone. And suddenly, we had a listing that sat on the market for 3 weeks, and I'm like, what's going on? For 1 bedroom plus, then it should be gone. Price had to be adjusted because there was a couple of neighboring projects that were finishing, and there was a sheer number of units just coming on the market.
That's it.
And that's supply and demand.
And people had they all of a sudden have an occupancy payment or a mortgage payment
they want to
that
cover
they
that.
can't afford to pay the whole lot of it. So whatever coverage they can get by renting it out, so they're dropping the rent.
So what do you see right now in the rental market in terms of stats? Like, has this year been crazier than the last few years?
It's interesting. Like, it's gone from literally almost a month's worth of inventory till about 2 weeks.
Wow.
In the last, call it 60 days. And so, and again, I think that's a big part of people moving back to the city.
And that's so crazy. We just had a condo up for lease last week. We put it up. And in the same one of these pre-cons that we purchased for a client, I think we were on the market for 2 or 3 days. We couldn't even pick up the key the same day that we listed it. So we had to go to the next day. We got 8 offers in 2 days. Literally 8 hours.
On a brand new unit.
On a brand new unit.
There you
And
go.
we got another, I think, 4 or 5 supporting documents. I was shocked.
Yeah.
And
well, there you go. It's kind of what you just said, where at the beginning of the year, it was odd. Right? I remember that, like where things were not like
Renting
they may
quick.
sit a week or two, but not the length at which rentals were sitting. Then all of a sudden, the last 60, 90 days, things have just picked right up.
yeah. So I think, again, the party for the pre-con might be over, but the smart money is still finding ways to invest in this chaos. So just before we wrap this up, any advice for someone, first-time homebuyers or just anyone looking to get into the real estate market in terms of how to find pre-construction deals or what to look for when they're looking at pre-construction deals?
So I think if you're a first-time home buyer, you've got to dive into the HST rebates. The federal government hasn't totally ironed out all the kinks yet, but
For the
GST rebate, it's getting close from what I hear, and it should be put into law, I guess, whenever the budget gets announced. There's that great opportunity for the investor pool. I would be looking at smaller units. There's a glut of them on the market right now, and that I think I haven't done the math recently. So if you're okay with owning like a studio or a really small 1-bedroom in the city, the rent could cover.
Really?
Based on where interest rates are right now, they're under. I know you can get 3-year money under 4%, 3.5, 3.6, 3.7, somewhere in that range. You may be able to cover. Because your maintenance fee will be next to nothing because it's a small unit. Property tax won't be too bad. And so when you add, and then your carrying costs for the debt, again, is not all that expensive at the moment. So herein lies some opportunity. As long as you have that long-term vision. Yeah. If you're buying small, like you're buying for to own it forever, to have your tenants over the years, pay down all the debt, and that is just cash flow in the future.
So see, that's the key thing, buying it for long term, because a lot of people look at this, okay, 3 years, I want to get out 5 years. I think the condo market we're in, it's not a 5-year condo market. You may, bounce and you make some capital appreciation. I think you got to bank on the rental income.
Yes.
So I mean, like you guys heard it, I mean, from the man that does pre-con day in and day out. So before we end it, I just want to go through some of the monthly stats because the sales have improved. So in September, we had just about 5,600 sales.
That's right.
And we've been running around the 6,000 mark sale for the last few months. The inventory went up a little bit. We're over 29,000 units, and the peak of the market, we were just over 31,000 units, which I don't even know if I had never seen that many units on the market. I don't even know when was the last time we had that much supply. But these two numbers lead us to months of inventory of over 5, which is pretty much, I would say, buyer market territory.
It is getting close. It's more of a balance. Anything around 5 becomes more of a balanced market. You're going to see the reason why it is high. It'd be interesting. We should do the math on this, where you remove the condos out of that, because that is all home types. That pertains to all home, and probably about, to the 30,000 units that are for sale, probably around 10,000 of them are condominiums.
You know what? I'm glad you brought that up, because I have buyers come to me and say, oh, you know what? There's so many supply. I heard, there's 30,000 homes for sale. Yes, there is, but not in the area you're looking at. We were looking at.
That's right.
Yeah, we were looking at an area close by Danforth. No, there's not that many detached homes on the market. Like, majority of them are priced right and they sell. But you're right. If you take the condo out of this equation, that number drops drastically.
Absolutely. The months of inventory number will come way down. I mean, just like you're speaking about the Riverdale market, like homes there are going to trade very quickly. You look at the average days on market, it's going to be way below what the GTA average is. So
what we do for our clients always is each area they're going into. We had a client that bought in Bradford, so we pulled the month of inventory. They sold in Aurora, they bought in Bradford. Aurora was at that point about just 4.5 months of inventory, so they actually got a super great price. They went into Bradford, 6.5 months of inventory. We got them at wicked of a deal. Like, this property was, I think, 3 acres or something. I think we negotiated down almost 250,000 off the purchase price. Yeah,
amazing.
So these are what I think someone should look at when they're looking into any areas. Average price has gone up from August to close to 1,060,000, and average days on the market over 30 days, so it's 33 days.
Again, condos, you remove the condo equation out of that. And again, we can take a deeper dive into that, and that's on us to pull those numbers out to really understand, because the condo market, those days on market, in some cases, well over 100 days. So that's really going to skew the average.
Yeah, it's crazy. I mean, when you look at the condo market, it's insane. And when you, and one thing we don't even know about the condo market is the assignment market, because a lot of people
right.
Yeah, because if you add the assignment market to it, it'd
be even longer.
Yeah, that's going to be, I think it's going to be in or around the 10.
That's it.
But that's what it is. Anyways, guys, hope you guys enjoyed it. Jeff, thank you for
Nima, thank you.
joining us.
This
Guys,
is great.
as always, thank you. As always, you know what to do. Click that subscribe button, share it with anyone you think find this useful, and click that bell button to get notified for the next one. Have a great day.